Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. We're going to talk about the partial repeal of Dodd-Frank. We're going to talk about some earnings from yesterday. We had Triple D, we had Sears, we had Del Taco. We're going to talk about Ford coming in, Twitter with another breakout, and we're going to recap kind of something we've talked about in the past on the show, more of an educational thing about why the last trade of the day, or the closing price, is the most important trade of the day. On the show today, our guest, Marc Chaikin, founder of Chaikin Analytics. He'll stop by at 8:15. Joel, how are we doing this morning in the S&Ps?
Seesaw session here in the S&P 500 index futures. Your pre-market low just below Wednesday's low at 45 even. Wednesday's low 48 and a quarter. So there's a target on the downside. I think we're going to zig and zag around our close a lot at 54 even. Pre-market high 62 and a quarter. That's one tick above the daily pivot. Should have had order out there overnight. Above that, things really open up. No major resistance in the 60 handle. We're looking at Bitcoin futures here, and Dennis, we'll talk about this with Dennis when he came in. Jeff threw in the towel yesterday with the tweet. He's done. He doesn't like the price action. It's down 5.5% here at 82.99. We have crude in the green by 35 cents, gold in the red by 240 at 13.2320, silver in the red by 1.7 cents at 16.52. Good morning to you, Dennis. How you doing?
Pretty good. What's this about Jeff throwing in the towel on the Bitcoin? He's done with it?
Yeah.
At least for now?
Yeah, and he went public on it here. Let me go.
Where's his tweet? I got to go see his tweets there, too.
I can read it here. He said...
What's his hand? Is it Jeff Goldman?
It's Jeff G.
Jeff G.
Yeah.
Jeff G44.
Yeah, he says, 100% out of Bitcoin. Hate the price action here and all the negative news. Makes more sense to get back in at 12,000 than hang on here. Always said it could go to 50K or zero. We will see. But if it goes to 50K, I don't mind. I'm getting back in higher.
If it gets back up over 12,000, he'll get back in. I mean, this is why Jeff has been a successful trader in equities for a long time. Obviously, he's a crypto trader here now, but he trades, still equities as well. But Jeff, a prop trader, very successful, ran his own prop firm. The reason, because he doesn't mind buying a stock at a higher price. So same thing with crypto. I mean, this is pure technical call, saying it looks like it's below and technically doesn't look good here. If for whatever reason it gets back up over 12,000, it'll start to look good again. And he'll jump back in. So he doesn't mind not owning it at 8,500, but owning it at 12,000. And that's just pure technical trader right there. Props to Jeff for saying, hey, it's not working out. I'm going to get out here right now. If it goes back, I'll get back in.
And I just told him I'm still looking at the $8,500 level. I got a little.
You were thinking about getting it.
Yeah, I was thinking about it, and I actually told him the 50% retracement of the. We had the low at 5,900, and then we got back up to 12. Just under 12,000. The 50%. I was looking at the futures came in at 8,500, but probably basis of cash is probably closer to 8,800, 9,000. And I said, hey, if it gets the way I'm looking at it, I'm not going to wait till 12, but if it gets back over that 50% level, and he said he was putting a buy stop in there. So I'm sure he was just joking with me. I just want to tell you about Dennis, about one of our steak dinners. Yes. Angie Baby's going to pay it to you. Because
why is this?
Because did
you make a bet with? And what do you mean? You can't.
Yes,
factor that
it's transferable. You never said they're not transferable.
She's why did you win a steak dinner from Angie?
She says she owes me one because we were talking about Alexion yesterday, and I had pulled back off the 128 level, and she wasn't sure about getting out. And I said, hey, wait to see if it takes out that previous day's low. And so she held on to it, and they came out with good news this morning, and she waited and she sold it up 13 points, and she closed out the position with a gain.
Nice
so
job,
she
Angie,
owes me
baby.
a steak dinner. I asked her if it was transferable to you, and she said, sure. So
You guys are talking. I'm fine with Angie baby buying me a steak dinner. You still owe me 2 anyway, so you're not getting out of both of them. In any regard here, maybe Angie baby will come out to the Motor City and take us out for a steak dinner.
All right. So, and Spencer, there's one thing you wanted to discuss with Dennis.
Actually, I forgot to actually have 2 things for you, Dennis. The first thing is I watched the documentary last night. There's a series on Netflix called Dirty Money about corporate corruption, and there was an entire 50-minute documentary about maple syrup corruption in Quebec. So I thought you'd find that interesting. There's also one about Valiant. There's one about HSBC, but the maple syrup one I think you'll like in particular.
Because I'm Canadian.
Oh my God, there's like a monopoly. There is a monopoly of maple syrup in Canada. It's crazy.
They just had a corner on all the maple trees.
Yeah, it's not a free market. I'm serious.
They cornered all the maple trees.
Nobody
else allowed to grow maple trees anymore.
Okay, that's the one thing. The second thing is
at least they can't tap them.
Well, no. Just watch it. It's interesting. Second thing is, remember last week we talked about, I think it was last week, we talked about 3D printing. And I mentioned I had those shoes and I bring them in and I forgot. Well, today I remembered to bring them in. So
the 3D printed shoes.
Yeah. So
make sure you're on the big screen. Put yourself on the big screen right now. You're on the little screen. Get on the big screen.
I will make myself larger. This is
I got to see these. These are 3D printed shoes?
These are 3D printed shoes. Okay.
Wow. They look amazing.
Yeah. You can see they're kind of like slippers, right?
Wow.
But
those are cool.
These are them.
What are they made out of?
I don't really know, honestly. I can't really describe the texture.
3D printing stuff.
But
they're not made of ink.
This is what they look like. So anyway, that's that. All right.
They're nicer than the
3D printed shoes.
Right?
We got them right there on the show. Just for the 3D earnings. Let's go. That's a good segue there, Spencer. Let's go to the 3D earnings, and you can give those to us. Full disclosure, I am long 3D Systems. I bought it 2 days ago ahead of the report. Just like the technical setup there, and I like the idea that it didn't have to blow it away to go higher because the stock really, if we really look at where it's been and where it's come from, it just felt like it wanted to go up on this. That's why I bought it ahead of the report.
All right, Triple D Q4 adjusted EPS 5 cents versus a 0 cent estimate. Sales of 177 million versus 163 million. So they beat both those numbers for the Q4 earnings, and that was. I don't think they gave guidance. I think that was it. Just the earnings beat on the Q4.
It's a nice pop. It's up 10% in the pre-market. It is off the pre-market highs, but holding. It's traded some volume too. Last night was trading some volume. This morning has already traded some volume. So it looks like it wants to get up over $13 here. I mean, it was the breakout from 10 to 12, and then it's consolidated for 5 or 6 days ahead of the report. And now we're getting a continuation of that move. So, I'm hoping, and obviously I'm long the stock. So it's a $14 level. That's a little pesky to me. If you look back in July, August, September, we had multiple highs right around 14. I feel like it wants to go up there and test that level, but I'm sticking with this one. I stuck it in the investment portfolio, and I had it in there before. I sold it for a tax loss for at the end of last year because I was down a little bit, and I bought it at 15. So I sold it at 9.5. Now I rebought it at 12.05 or something. So I actually lost a little bit on the scalp, wrote it off for last year, but I'm back in 3D. Main reason I got back in too was my buddy Pete over at Barron's Rings. He was just saying he had a Stratasys printer and a 3D printer, and he's got some expensive ones because they're doing major production over there on their rings. I made the rings for the Cleveland Cavaliers, so obviously that's it's a major production that they do over there. He got rid of his Stratasys one, and he says he liked the 3D Systems ones better. Now he has 2 3D Systems printers. So says they're really figuring the stuff out. The technology continues to get better, and that's why I bought it, because Pete likes it for his production.
All right, pre-market high, got a real nice pop off this. 1375 is your pre-market high. Backing off and just kind of settling here at 1330 since that 4 a.m. open. Boy, big gap up here, 1253. I don't think we're going to fill the gap there. That was yesterday's high, maybe a whole number like 13 even, might hold it. Dennis mentioned the $14 level. I see 1444 as a high in October of last year, but I think you're going to have some work to do to get up to that pre-market high of 1375, and really, really hard to find support in this thing. Before we move on to the next stock, Dennis, you see RKDA lately? Did you see what that thing did over the last couple basically what it did yesterday?
Well, I'm bringing it up. It's not a stock that I closely follow, but holy cow, 1, 2, 3, 4 days ago, the stock was $5. It's now $47. It's what they say. They cured cancer or something. What's the deal here?
Spencer, what is the news?
Yeah, this is one I actually haven't been following super closely, but holy moly. What happened here? They achieved key resistant starch wheat technology milestones, and they're preparing for a commercial launch. So whatever product they make is
some type of drug.
They're preparing to launch a commercial.
Got cooking over there.
They're launching a drug. Big deal.
This is a huge move. An unbelievable breakout move here for RKDA. One thing, if you can go out to the technicals and get some levels here because the stock was much higher. Back in 2015, this was almost a $200 stock. Now, I don't know if it was there, if they did some reverse splits. A lot of times these things get low and they do some reverse splits, but for whatever reason, it's blasted off into orbit on the recent news. These moves typically, I'll just say, typically these moves don't last. And I don't know anything about the company. I don't know anything about the specific drug. All I can say is when you get a stock that goes from 5 to 50 in a couple of days, I usually ring the register.
Yeah.
If I'm lucky enough to own it.
Yeah. I'll DA888 in the chat's asking about it. And
he says it's wheat technology. It's not a drug. It's good for food. Okay.
All right. Someone got the memo on the 12th because it went from, it'd been trading. Actually, they got the memo a little bit before that because it traded.
Actually, they got the memo way back on the 8th.
Yeah.
It started to go up.
They did.
It doesn't look like a big move on this chart, but the move on the 9th was almost a double from 5.5 up to over 11.5.
I know.
So basically doubled. Basically the next day it almost doubled again. Then you had a little inside day there, and then maybe they knew the news was coming. But then yesterday, obviously, with the blast off into orbit, goes from 11.17, the low of the previous day, up to over $50. That being said, I'm not coming in here short in these things because this thing's been doubling for 3-4 days in a row. You could go to 47, could go to like 80 or 90 on you, and you'd still be, it's in rocket ship mode. So it's hard, to come in here now. I'd say if I'm just trading on a pure technical basis, that 54.98 high from yesterday, you get up over that, you start to think, okay, higher. But if you get up to like 54.85 or 54.50 or even 54 and you start to come off, then you think, ooh, potential for a double top. And that's how these things usually end. They'll put in another high the next day and they can't make a new high. And then everybody trading technically takes note of that and often rings the register. So you always want to see the thing continue to make new highs the next day. If it fails to do that, that can be a reason for the stock to top out.
Yeah, I would like to launch an investigation of who was buying that stock on the 9th. It traded 79,000 shares on the 8th. It traded 1 million on the 9th, okay, out of nowhere. And then the bots caught on. It traded 3.5 million the following day to up to 1280. And then you had that light volume day of 500,000 where it just pulled back a little bit. Then it traded 13.9 million yesterday. I would just say, let it trade. It's a low float issue. And then when the volume starts to dry up a little bit and, runs out of buyers, that's when I think it will get slammed. Also,
only 1.5 million shares in the float is what Chili Trader is saying. Again, I know nothing about this company. I saw it hit my filters a couple days ago. That's about it. I never really looked into any of it, but just be aware when there's stocks are this thin, you can get short squeezes. I'm not sure if there's a huge short interest. Again, I've looked nothing into the fundamentals of this company. I'm just saying from a pure technical basis here, when a stock goes from 5 to 50, these moves usually aren't sustainable. John Dodson saying it's a game changer. He's a believer maybe, but I've just seen this story a lot of times in a lot of potential game-changing stocks. When they go from 5 to 50, when I usually look at them a month or two later, they're usually back and giving back, 70 or 80% of those gains. So I personally just, obviously you want to look in and get the details further. If you really believe in it, go for it. But I'm just saying, as a bystander, knowing nothing about the story, when I see this 9 out of 10 times, I usually give it back within a couple months. At least a lot of it.
My number of the day is the closing price there, $47.99, where we are trading now.
Stargazer in the Google chat and the YouTube chat mentioning that they have earnings on Tuesday. So
RKDA?
Yes. So keep an eye on that. 8:16 though, we're gonna bring on Marc.
Can I just make one?
Yes.
Get Marc on the fly.
Yes.
Go grab Marc.
Okay.
Can we get him on the fly?
Yes, we can.
Get him on the fly, and I just want to make a point, and maybe Marc will, Marc will have some comments here too.
Okay.
But I'll just say, these are the kind of stocks that.
Good morning.
Hey, Marc.
Hey, Marc.
Hold on one second.
Marc.
Dennis is
Marc,
midpoint.
Dennis is on a
I
rant.
just want to make a point on this stock, and I wanted to get your thoughts on it too, Marc. That's why I wanted to bring you in. There's this high flyer RKDA that's went from 5 to 50 in like a couple of days, and often, we see our chat and we see a lot of, traders light up and they really like trading this really volatile stuff because there's so much money being made. I always look at it and think about there's lots of money being lost as well, though. I've been a prop trader 18 years. I tell you, I make my living by avoiding this kind of stuff, these crazy stocks, because they're unpredictable, where, you can look at other stocks and you can get better feel, better setups. What are your thoughts here on trading the crazy stocks that go from 5 to 50 in a couple of days? Is that something that you look at as well, Marc, or is that something you try to avoid?
Well, obviously these stocks are like liquid mercury, hard to get your hands around them. Ironically, I'm looking at the Chaikin power gauge rating, and in December, for about a month or 3 weeks, it was bullish at the 460 level. But
you had this one.
Turned neutral.
Well, power gauge had it right.
Yeah, looking back, maybe it was bearish for about 4 months before that. But the point is, once the stock has done this, the horse is out of the barn. There's no way individuals can trade this without getting their fingers singed. So you're absolutely right. Look, this happened to Overstock.com, which was a stock that we actually got on board because the power gauge was bullish, and people thought, hey, this is a Bitcoin play, and it turned out to be a Bitcoin play. Went from 16 to 90, but look where it is now. It's all the way back down because Bitcoin has dropped and people have gotten a little saner. So this is tough stuff.
It's the toughest
might as
stuff
well
to trade.
Go to Las Vegas.
Well, it's the toughest stuff to trade, in my opinion. And I've always said, if you're good at trading these high flyers and you've got a niche and you've got a consistent record doing this type of stuff, by all means, continue to do it. But I'll say, if you're a newer trader, and I got into it the same way back in 1997, 1998, I was trading the penny stocks out on the Vancouver Stock Exchange, and that's how I got into the market. And back then, maybe just because the market was really, we were in this raging bull market back then. I did pretty well, but I think a lot of stocks were going up, including penny stocks. So I was probably more just a beneficiary of the overall market as opposed to trading skill. Then when I got involved with a prop firm in 1999, and you start to realize, hey, you can get more consistent trading the bigger stocks because they're more predictable. That's, when I really, it's my bread and butter here now. So now if I try to trade this type of stuff, I almost always lose money. So I stay away from it. And, maybe it's not my cup of tea, but I just say the bigger stuff, from what my experience, and seeing a lot of prop traders, is easier to trade. And this stuff is really hard to trade, guys.
Yeah, one thing I would add to that, someone who's lucky enough to be in this stock, and even with this rally, it's got a market cap of 72 million. So before the rally, it had almost no market cap. But if you're in it, sell it. Let someone else worry about the next 200% move, because the stock just went up 300%. So sell the thing and take advantage of it, and don't worry about where the next move's coming from.
What's that saying you say, Joel? Never look a gift horse in the mouth. Did I say it right?
Yeah. Yep.
That's an oldie but a goodie.
It's one of my.
So, Marc, okay, let's go back to the power gauge here. What is it saying on the market overall? Because I'm having a tough time getting a feel for the S&P 500. And if we just look, at the market overall here, and maybe you want to look at the SPY or even the Qs, NASDAQ made a new high on the most recent move. SPY did not make a new high on the most recent move. We looked like we were ready to keep going there, and then, we've had some political uncertainty with, obviously, Cohn out, and then now Rex Tillerson out, and the market has come off its highs a bit here. What's the power gauge saying in the market, though?
Well, I think the power gauge likes the sectors that are going to do well in a interest rate environment where rates are rising. Power Gauge basically zeroed in on the right groups, which are technology, healthcare, and financials. In terms of the market, you've got to look at other indicators. I think the market's just fine, and I still hold to 2,800, 3,000 for the year. And the reason is earnings and no recession. We've got great earnings, big revenue spikes, lots of cash on the corporate level for buybacks and M&A activity. And there's no signs of a recession. So I'm bullish on the market, but you've got to really put on your stock selection hat to make money, because that easy money that we made last year when we never had any pullbacks is no longer there. Lots of volatility. So stock selection becomes paramount.
Jump into the financials just a little bit further, because they're actually going to be in the news here a little bit this morning as well with last night's vote. They're apparently going to repeal most of Dodd-Frank, it sounds like here, and this was already on the table, voted and passed at the Senate last night. And if you look, the banks are quiet this morning. I'm actually surprised they're not up more, but they are trading a little bit higher. Bank of America's up, JP Morgan's up. I mean, I don't know if we're going back to the Wild West of banking before 2008 here, but it just got a lot easier for a lot of these banks with this vote there last night. The charts on the banks still look pretty good. We pulled off the highs the last couple of days, but let's look at a chart like Bank of America, or look at a stock like Bank of America and get the Power Gauge rating for BAC, because this stock did make a new high on the move 2 days ago, did pull off it a bit here just recently. It's up a little bit this morning again on the Dodd-Frank news. What's the Power Gauge saying on BAC?
Power Gauge is bullish on BAC, also JPM, which you mentioned. And I actually think the regulatory rollback is already in the market. That has been
that's priced in
a constant since Trump got in. I think what the banks are doing is basically treading water here until interest rates move up a little more. You got a big pullback in interest rates yesterday, not big, but big enough. And you've had about a 2-week rally in bonds. So I like the banks. I think that's the place to be in a rising interest rate environment. Regulation rollback is obviously helpful. I also think the brokers and the sort of specialized firms like Evercore are really interesting here. Evercore is a really fine brokerage firm with an emphasis on M&A consulting, and this stock has done extremely well. So I think, in addition to the banks, you can look at some of the brokers and the money managers, which I think will continue to do well.
EVR is the ticker on Evercore, if you're interested. Technology, what stocks are you really liking there? Because there's a lot to like in the technology. I mean, the market has really been led by technology stocks. And what was interesting, even in a down tape yesterday, you had some tech stocks that were breaking out. PayPal, which I own in my investment portfolio, and Square, SQ, both blasting off. Square blasting off to new all-time highs again here this morning in a tough tape. And then Twitter was up as well. So Dorsey was a happy camper there yesterday. What other stocks are you zeroing in on the Power Gauge?
Micron, obviously, just defying the odds, defying gravity, because people are starting to believe that semiconductors are not a cyclical industry, that it's a growth industry. There's not a lot of overcapacity like there usually is. PayPal was probably up because the CEO was on Kramer out in San Francisco talking about the shift away from the eBay currency and how it was all planned and there was a 5-year plan and so forth. I think tech is still very, very strong. You've got a lot of naysayers. I love to see that, telling you that this is 2000 all over again, and it's not, because the earnings are much stronger than they were in that vein. So tech, I think, is pretty strong. And I'm going to go out on a limb here with healthcare. We all know the sell in May and go away theory. Sam Stovall popularized that in a book that he wrote in 2009. And in that book, he documents how that actually works. But what he is less known for having said is healthcare actually goes up between May and October. So we've got some wonderful healthcare stocks like AbbVie, even Express Scripts, which has gotten a bid from Cigna. And I think whatever you think about the market, whether it's sell in May and go away or whether it's going to keep going, healthcare is a sector you want to be looking at.
What about a stock like Cigna? And this has really broken down since the merger. I mean, it was a stock that was a little weak ahead of it. They announced, this potential acquisition of Express Scripts, and CI has been straight down 25 points since then. We're now at 167, significantly off the highs of the year, which was 227. Is this something you'd be looking at potentially, like getting oversold here now, or is there just more pain ahead for a stock like this, and this chart is just too ugly? CI.
Well, the chart is ugly. Chaikin money flow really ugly since late January, just as the stock started to break down, and institutions continue to sell this stock. If you want to play Cigna, then I would go with the Express Scripts, but this is catching a javelin here. This is really tough territory on Cigna. There are other ones like AbbVie, some of the biotech stocks like Amgen, even the XBI, if you want to go a broad-based biotech ETF, only on pullbacks though. I'm not a big fan of chasing strength in this market, as you point out. Uncertain, what the next, say, 2 to 4 weeks is going to look like in the S&P. Also interesting that the small caps came very close to making a new high. And so it's interesting because tech led the way. That's what got the QQQs on the charts. Small caps also came back. Part of what's going on here is related to the dollar, and you aptly point out that there's some political upheaval that's affecting the market. Normally it doesn't, but now you got Kudlow coming in. He's been a strong dollar guy his whole life. It's his fixation. And so it's interesting that strong dollar really would probably put a lid on large caps for a while, because the weak dollar has actually helped them. So Kudlow coming in is a wild card, and it's also a wild card relative to China and tariffs, because to get along with the other people in the White House, Kudlow's going to have to embrace tariffs on China, even though he's a free trade guy. So there are a lot of new variables in the mix, and until that sorts out, I'd say in the next 2 to 3 weeks, the market's going to be choppy.
We're on the line with Marc Chaikin of Chaikin Analytics. Marc, I just had a question about the Cigna here, and I know you've worked with some of the big banks and on the institutional side. When Cigna announced this merger, I mean, the stock had looked bad. Like to me, this looks like institutions are like, this is a terrible merger. They're spending money. I don't care how long I've been in the stock, been 2014. I don't like it. I'm out. Do institutions, that's what the price action looks like, because 190 you were at and then open to 180 straight down. Do they have those kind of rules and those kind of criteria where, because you talk about a company making an acquisition, or is this just the momentum of the market and the bots taking over? Because to me, you look at the volume and, what happened on that day, it went from 1.3 million to 17.3 million. Institutions just say, I'm out. I'm done. I hate this merger.
Well, I think you've nailed it. And the way you can really see that is if you look at Aetna, which is a company that, Cigna and Aetna, Hartford-based, always compare. Aetna was going sideways, just like Cigna was after the sell-off from the January peaks. And it's continued to go sideways. And there's still some institutional selling based on Chaikin money flow. But clearly, Cigna, caught the eye of the institutions in a bad way. There might be some merger arbitrage going on. So sell Cigna, buy Express Scripts. That would put pressure. But you're absolutely right. They just, for whatever reason, a combination of merger arbitrage and Express Scripts being a controversial stock. Remember, this stock, even though it was making new highs when they made the bid, this stock all through 2017 was being lambasted by people who said pressure on drug prices. They're losing Anthem Health, which was their biggest, client for their pharmacy benefit management stuff. So I think the feeling is Cigna's paying up for a stock that's a little bit controversial. Maybe M&A and healthcare is going to go on. I think it will, actually. And maybe this is a response to the Amazon, Berkshire, JP Morgan consortium, where they figured if we don't buy up Express Scripts, maybe this consortium will. So lots going on here as well. And well to stay away from Cigna here, and I think you nailed the analysis.
Two more, Mark, and we'll let you go. These are both from our chat. Any thoughts on Boeing here?
Well, I think Boeing was down yesterday in response to fears of a trade war with China. China's first and most obvious retaliation is going to be against Boeing. And so I think that's a function of two things: the Trump tariffs on steel and aluminum, and then Kudlow coming in. And even though he doesn't believe in tariffs, he's got to embrace, according to the top political analysts, he's got to embrace the China tariffs to get along with the other guys in the White House.
And then the other one.
So bottom line is, I think you let the dust settle here and see. Power gauge just turned neutral because it broke an important support line. But longer term, especially with a weak dollar, again, Kudlow affects Boeing. Strong dollar and tariffs on China, not good for Boeing.
The other question was on AIG.
Let's take a look. I haven't followed that for a while. Whoa. I just got goosebumps. Don't go near it. The stock, a triple top series of lower highs starting in late July, then October, then January. This stock looks like death warmed over. Don't know why, but you don't have to know why. It's making new 52-week lows.
All right, Mark, I just want to ask you real quickly here. You're talking bearish Tesla here. Yeah. What do you think? If it's going to finally break out of that trading range?
No, I don't. I think you will make a lower low down at 290. We've talked about this on the air before. I just don't like the stock. I think Elon Musk is the P.T. Barnum of the 21st century. That works with rockets. It doesn't work with cars. And you've got whistleblowers in there inside the company saying that they're putting out faulty cars with bad parts. And Consumer Reports already did an article saying they don't test drive their cars long enough. Most car companies, 18 months before they put a car on the road. Tesla, it's closer to 6 months. So anybody who's buying Tesla cars is doing the test driving for them, and it's going to catch up with them. Plus, Volkswagen announced a huge electric car initiative. Over the next decade, they're going to go all electric. And Volkswagen is a big company that knows how to turn out cars, from Porsche to Audi to Volkswagen. So drive the car, but don't own the stock. Tesla's dangerous stock to own long-term. Short-term, it can do whatever the heck it pleases, but I do think it's going to trade down to 290. A bearish put spread here with an April expiration might work out really well.
All right. Marc Chaikin is now with us. Chaikin Analytics, CHAIKIN Analytics.com is his site. Marc, thanks so much for the time today. Really appreciate it.
Thank you. Always love being on. See you in a couple of weeks.
Yep.
Thanks, Marc.
All right, 8:33 now. Do we have an imbalance?
Do we get some buy imbalances there, Triple D? We just got a little.
No, you know what? They're pretty quiet. Square SQ, 68,000 to buy. Keep it on the $55 level. There's 111,000 there in the book at 55. That liquidity becomes active at 9:30. It's traded a lot of volume, so I think it can open over that. It's already traded 55. It was trading lots last night as well. But if that holds down, the opening print might give you a shot here, because this feels like it wants to go here again. So maybe if it can, open up in the lower 55s, maybe it gives you a shot for a long off the hop. I don't know if I'd be shorting it, though. Just so much strength. Second thing is, we got to bring your attention to Alibaba here this morning, because Alibaba, the buy balance is small, only 4,200, but it's probably going to grow. I mean, this stock is up $6 here now, off to the races. The news is that they are planning to list shares in China. That's what the Wall Street Journal is reporting. And you can see the huge pop in Alibaba. I mean, it is back. This is an unbelievable move. It's going to test 200, it looks like, here this morning. Big pop here as we get this news. They might list in China.
And why would that provide such a big boost, Denny?
Well, I just think you got more traders over there. You got a lot of active markets over there in China, and you've got another market for you to trade in. So I don't know. Fundamentally, is there really, is this going to help their bottom line? I don't think so. I just think there's more action in it. And what I'll say is, there's a lot of funny stuff happens over, with stocks that trade over in China. And, they do trade at a different time than we do. So you could consider that, okay, well, Alibaba is right now it's a Chinese company, but only trading in the U.S. So now it can trade over, if it does list in China, it could start trading, at 9 o'clock at night Eastern time and start trading through the night as well. So there's a potential to really, pump the stock up a little bit more overnight as well too. So I just look at it from that perspective. I think it, could be a little boost to the share price short term here. Fundamentally, I don't think it makes much of a difference.
Oh boy. Nick sent out a video on this thing yesterday, and he's usually pretty bullish. I don't even want to listen to the video now because I'll be kicking myself, but he had a setup in this thing yesterday. So, but I'll just give you
was he?
Yeah,
so Nick was bullish yesterday?
Yeah.
So Nick's making some money?
Oh my gosh, he's probably...
We got to guess, man. I tell you, Marc Chaikin, he's usually right. Nick Chaikin, these two guys, they get stocks right. And I like to listen to both of those guys because they really, make good calls. I mean, Nick, obviously he trades in a little bit different way using the options, often looking at where a stock is not going to go and then writing the insurance on, for the stock market there. And, he's made consistent money through the years, but he makes good calls overall too. I can kind of see the setup he was talking about is banging its head up against the wall there, 1, 2, 3 times the 194 handle. And now, boom, we get the blast off into orbit. Now, obviously, we're going to test 200 here this morning. And then you think the next level, if we do take out 200, is those 205, 206s at the beginning, at the end of January there. And that's the all-time high. And hard to fight Alibaba. I mean, they've been, unbelievable with their numbers, blowing numbers away. Ever since they blew that quarter away, Joel, that we talked about on the show, which we got to go out to the weeklies to find that. That was back when the stock, you can see the big candle, when the stock closed at 122, and they came out with the earnings. They were like,
it wasn't earnings.
They said, what was it?
They said that like revenue growth is going to be 50% higher than what.
And the stock never looked back from that. It went from 123 to 148 that day, pulled back a little bit, like 130s. That's all you got. And it's been straight up ever since. I've been looking at this and wanting this in my investment portfolio, but there's really been no shot to get it if you're waiting for a pullback because it just doesn't pull back. So I guess this is one you had to chase.
And trading at the highs of the pre-market session, pre-market high 199.33. You got a big old gap to fill in this one, gapping into a gap area. You have a gap between, what day was that on? You gapped down from 202.80 was your low on the 31st. Previous day's high was 199.49. So look for that. 202.80 could be a target on the upside. And just, kind of going back from yesterday, I'm looking at this pre-market chart and saying, holy smokes, this thing isn't done going up yet. Kind of like Cigna yesterday. We were talking about it in the pre-market session. There was a big seller in the after hours / pre-market. It was just scraping up along the lows and looked like it. We thought it would test 40 when it was 43. Boom. It much lower than that. Kind of flatlining here at 37.65. But no Dennis, no 835 guest today. And did you ask him about imbalances? Because I saw
he did, and then I said Square. Square is now 131,000 to buy, and this is 55.95 here now. So it just popped when that imbalance doubled here.
Yeah.
I don't know if the 55 is going to hold it down enough. Like I said, I was looking at this as a day trade. If you could get long in the lower 55s, not sure you're going to get that shot. I'm still going to be trying to get long in the lower 55s just for a short-term, opening trade. I'm not sure if it's possible. Square has been off to the races. PayPal too. I mentioned that when we were on the interview with Marc. I've got this in my investment portfolio here. Not my timeline on this one isn't forever though. I'm going to watch this one, watch sentiment. I kind of had an idea when I bought it. I like the setup because it was kind of just consolidating there around $80. It was looking itchy to pop. Maybe Kramer was a catalyst to give it the pop. He had the CEO on last night, obviously talking about the eBay stuff and the spinoff and and talking about the repercussions from that. And that's why the stock sold off in late February because of some issues there. Those issues maybe not as big as the market had thought. It's starting to come back. It's just one that I think eventually I'm going to look at this. It's going to be over $100. I think if it got under 75, I'd be concerned. Okay. That's a longer term swing trade type.
All right, S&P's up $4 here, 27.58 even. Just short term here. We're finding support at the close, 54 even. We've just bounced off that the last few brackets. So market really started trying to stay green on the section. Actually, going back here since since 7:45, since before we started the show, all your lows on the 15-minute chart, just below the close. So working hard here at the close. David B's mentioning Axe. Yeah, one of my good calls there. That got absolutely lit up the last few days, thanks to Gordon Johnson. I mean, unbelievable influence on that thing. And I got peeled off a little bit yesterday because I'm a little leery of this low that it had here at 38.43. You
got a position on next?
Yeah. I shorted it when I bought some puts when I went to 43.5.
It's a nice breakdown right there.
And then I want,
you know what? I'm kicking myself here too because I actually shorted the stock at 43.5 in the pre-market that day when Gordon Johnson came out with the downgrade. It hit my tape, and I'm like, "That's Gordo. Gordo knows what he's doing." I shorted at 43.5. Within like 10 minutes, it was 42.5. You know, scalper blood in me is like, ring the register, and I ring it. And then obviously, I was down to $40 that day. One thing I've always never been able to do well is hold stocks. It's a scalper blood in me. Me and you know, we have so much market maker in us. You get a point on something, it feels like you're winning the lottery because, you know, I used to trade for nickels all the time when I'm doing market making. So one thing I've always struggled with, not in my investment portfolio, that's completely different, but in my trading portfolio is holding on to the winners.
Okay. All right. We're kind of jumping all over the place today. Spencer, you want to rein us in a little bit?
Dennis, I know you wanted to talk about Dodd-Frank.
Yeah.
Do you want to?
I do. So give us the news here on the vote last night. We briefly mentioned it with Marc there. This is big news for the financials. Marc was saying maybe it's all baked in. I think some of it is, but I tell you, the banks are starting to catch a bid here, so maybe it's not all baked in. What's the news from last night?
So it passed in the Senate. It's going to the House now. Two major things that I've seen that the repeal would do. It would increase the threshold at which banks are considered too big to fail. That threshold is currently at $50 billion in assets. It would increase to $250 billion. So it would only include about a dozen banks facing the strictest regulations. Other thing I saw, it would shield. What else did I see? There was one other thing. Oh, right. These banks would no longer be required to have plans to be safely dismantled if they fail. So they wouldn't have to have stress tests and the like. So basically, the biggest thing I saw is it's raising the threshold for too big to fail. That was like the biggest.
And if you don't follow the regulation, Dodd-Frank was proposed obviously after the financial crisis because we know the banks almost brought down the entire system with loose lending practices. But not only that, you know, there's proprietary trading. There was a lot going on there. So Dodd-Frank originally started as from Barney Frank.
It started July 21st. It went into effect July 21st, 2010.
Yeah. So. And this brought in, you know, what banks could do, how they could lend. You know, there's a lot of different rules. You know, they had to, you know, spin off any proprietary trading operations, not get involved, you know, because they didn't want, you know, the U.S. government didn't want banks trading with taxpayer money when they gave them all this money, you know, to bail them out.
Stress tests.
So, which is understandable. You know, stress. There's a lot more happening. So, you know, we kind of had the Wild West of banking before 2008. Dodd-Frank brought that in. Now we're repealing a lot of that. Are we going back to the Wild West of banking? I'm not sure we're going all the way back there. We're not saying we're getting rid of Dodd-Frank altogether. We're repealing some of it here, though. So regulation's going to get a little bit more loose for the banks. That's only a good thing. I mean, that's only good news for the banks. And if you look this morning, they are trading higher here in a tape that really isn't up. Bank of America is now trading up over 0.5%. Goldman Sachs is trading up over 0.5%. JP Morgan's up 0.5% here now on a tape that were relatively flat. So banks are catching a little bit of a bid. A lot of this probably was priced in. It was probably expected that was going to get through. We know Trump has talked about deregulation in the banks as well. But that being said, you know, this is still good news for the banks.
And taking a look at Bank of America, I'll just do a quick technical on that. The day that, I don't know, was it Tuesday or Wednesday, that's kind of like the soft CPI numbers came up, but they rallied the market hard. And this thing popped over 33. And I'm like thinking to myself, man, this is not really great for, you know, interest rate hikes, and ended up peaking up that day at 33.05. First time over 33. I don't know. And how long has it taken us? We haven't been over 33 since September or October of 2008. And now it's come in a little bit, trading up in the pre-market, trading up 16 cents. Bank America, if you want one target, 32.55 was your high from yesterday. And that 33 number is still relevant. You did pop over 33 on the 12th to 33.05. Previous day's high, 32.99. So we'll see if the sellers will reload again if we get back up to $33.
Goldman Sachs coming back, but it was a tough 2 days here, so you get a little bit of a bounce here on this news. We'll see if the bounce can hold.
Yeah, I mean, it just kind of feels like, and we could talk about this maybe more at the end of the show. You know, you got the triple witch tomorrow, triple quad witch tomorrow, position rollovers, option position rollovers, futures, a lot of things going on that's not necessarily taking new positions in the market, but rolling over positions and rejocking yourself. So you're seeing some, I think you're going to see a lot of two-way action today. I think we're going to have one of the tightest ranges of our 9-day average trading range is down to 44, got back over 70 or 80. And so you can just kind of feel the market just kind of tightening up here. And I think that's due to the quad witch.
It's a tricky market here right now. So, yeah, maybe we'll get a little bit more feel here after the quad witch. A lot of things can happen there. You have institutions jockeying. There's equity positions against their option positions, and that can really move markets, especially on the close, as those options become closer to expiring. Just jumping over here, Square Enix buy amounts at 214,000 a buy. Does look like it's going to take out that 55 seller here. Obviously, it's just a matter of whether that holds the opening print down at all. I don't know if we're going to get a shot in the lower 55s here or not. Like I said, I'm still going to try. Jumping over here to ratings land, and there was a few interesting ones as well. We got Viacom. I want to go to this one first. It looks like it's getting upgraded. Needham, is it, Spencer? I didn't write it down. Was it Needham upgrading Viacom?
I think so. Let me check again real quickly. Yeah, my pro is loading. But yeah, pretty sure. I'll confirm. If it's not Needham, I'll tell you, but I'm pretty sure.
It's catching an upgrade here this morning.
Are you
Stock is up one.
Are you looking at VIA or VIAB?
Either of them.
Okay.
VIAB is the one that's traded a little bit more heavily. VIA is a more, it's the voting one. It's not as widely traded there and widely owned. So I usually look at VIAB because the chart's cleaner. This has just been a trading range from 32 to 34. We know there is the potential. CBS is still talking about potentially bringing the stock back. Obviously, Viacom spun off CBS years ago, and now CBS has been talking about bringing them back together. Somehow these two companies merging back together. That's a wild card here for VIAB if you're buying it. I'm not sure if the upgrade is talking about that or not, but just from a technical perspective, range has been 32 to 34. I'd be scared to short the top of the range just because of the wild card, that it comes out and they're getting acquired by CBS for 40 or something. You'd be underwater, but I like it in the lower 32s just because they got lots of support.
Yeah, I did find some major support. Yeah, I mean, nothing perfect, but you call 32.50 a good level. 32.28 was yesterday's low. Trading up on very, very, very light volume. So keep an eye on 33.25. That's your 2-day high, then your 4-day high at 33.48. But just with this light volume here of 45 cents, maybe try and bring it in cheaper. Maybe if you want to try a lower risk buy, 32.84. That was the high from yesterday. So if you can get it in the 32.80 handle and risk down to the close at 32.64. But just buying it here at 33.10, I'm not sure. Up on kind of light volume.
You've got Signet getting downgraded at Needham. This is obviously one that's followed through from the day before. SIG absolutely annihilated. It was trading 43 pre-market yesterday. Me and you both thought it would test 40. Yeah, I didn't know it was going all the way down in the 38 handle, but now it's in the 37 handle with the downgrade. SIG is still free falling here. If you're looking at this one saying, wow, it's too cheap, I usually like to wait until stocks stop going down before jumping in. And I'm looking at this one, from a value perspective, thinking, yeah, it is starting to get cheap here. There's not a lot of pure jeweler makers out there. I just don't know if it's got the same appeal that it did, like years ago. But SIG, 37 and change here, 37.65, down 1.5%. I do think there's value here, but stock is so out of favor. I think, there's no hurry to get into it here.
I think, let's see. I think if anything, maybe get some seller exhaustion here.
Maybe.
I mean, it's just flatlining, Dennis. I mean, if you can go back, there's definitely someone bringing in some stock here in the lower 37 handle because basically since 415 yesterday. I mean, all these lows are in the 37 handle, pop some into the 38, but I think you have a very patient buyer here looking for big offers in the 37 handle. That doesn't mean that it's going to blast the 39 today. I just think that if they're willing to buy a chunk in the 37 handle, they might even want to buy more in the 36 handle. Yesterday's low 38.10, so in the close of 38.22. That's your binary resistance for now. Tailored Brands, TLRG, they reported, right?
Yes, they did.
Tailored Brands reporting yesterday, Q4 adjusted EPS flat versus an 11-cent loss estimate. Sales of $859.9 million versus $810 million estimate. So they beat both those numbers. Comps up 2.5%, and that's about it.
I mean, report not great here. You really look at where the stock was, where it is now. You can say, oh, well, it's been on a run, so they need to blow it away. But really, when you go out to the monthlies, hasn't really been on a run. I mean, yes, it's impressive from last year, 10 to 23. But if you just go out a little bit further than that, look in 2015, this was a $66 stock.
Yep.
So it's still in the gutter. They're still trying to recover here. The numbers were good enough to get you a little relief pop here. Let's see what it does at $26, if it can even get up there. I don't think so, but that's the level that it got up to back in January. That's where your major resistance is going to come in, and that's the level it would need to get into before you can start to get, thinking about, $30 again.
Guess what your after hours high is?
Is it 26 right on the kisser?
Yeah, 26.
These work, man. These levels work.
Yep.
Joel, you should have patented all these numbers back in the day. Joel always is a simple high, low, close, pivot guy. And you know what? Those numbers work. It's simple, but it works.
Yeah, we're opening into a little bit of daily resistance, a couple high. Well, no, they're about higher. Another top at 24, double top at 24.55 at 24.56. So that's well ahead of that pre-market high. It looks like we will take that out. I tell you, I do like, that's part of Joseph A. Banks, right? We're part of it. Yeah.
That's one of their big businesses.
I mean, I ain't no fancy dress or anything, but I can go in there and get like 3 of these dress shirts for, I don't even know. They do these 2-for-1 or 3-for-1 sales.
Stuff's cheap in there.
Yeah, it's cheap. You can just throw them in the washer. You don't have to take them to the, like my nice dress shirts I take to the cleaners and stuff. But man, I just throw those things in there, throw them in the wash, and it's cheap, man. And it's always like 2-for-1. And they send me these coupons, so I like it. I don't do much shopping, so I don't know if I'd go out and buy the stock on that. 853, we're getting some questions. Dollar General earnings.
Yeah, we had a question in the chat from like 805 on DG. So let's look at that one real quick. Dollar General reporting yesterday, Q4 adjusted EPS $1.48. That's in line with the estimate. Sales 6.1 versus 6.21 billion dollars. Comps up 3.3%. They're raising their quarterly dividend from 26 cents to 29 cents per share. They're also buying back $1 billion in stock. They also gave some fiscal year 18 EPS guidance. About $6 is the estimate. $5.95 to $6.15 is the range there. Sales up 9% for the fiscal year.
It's a good report. It's a good enough report, and that's why it's popping. Dollar Tree obviously got hit really hard a week and a half ago, from $100 down to, or it got down all the way to $86. But the buy the dippers came in on that one there too. While you didn't get no dip, you got a little bit of a dip in sympathy here with Dollar General from 95 down to 86, but then it was getting bought up ahead of the report. Now you're all the way back up there in the 95, 96 area. Yeah, so these dollar stores always seem to come back. I mean, they go out of favor for a bit, but when the dust settles, I always look at these things, they seem to come back. So these are ones that, BTFD just seems to work with. And, you can look, and what I'm looking at is, late in 2016, you look at the Dollar General chart, it went from $95 down to 70, then up to 85, then it's back down to 70, then it was up to $80, then it's down to 70, then it was up over 80, then to 105, and then it's all the way back down. And, it's probably going back up there again. They seem to come back.
You have a pre-market high. They got really excited on this one, and they took it up to 98.12. Currently trading at 95.89. So I'll make my my level of control 96. 96.32 was a high, and I guess that's the only one there. Now, I thought I saw a double top, but this is a higher price stock. 96, because you had a high at 589 and a high at 632. So above 96, look out here. Could test that pre-market high. Coming back on the downside, your low off the print was 93 even. So that's where people were buying it in the pre-market. Dennis, let's just talk a little bit about Ford from yesterday. Did you take some heat on that one? Because I know you were getting short.
I was trying to remember the trade.
Yeah.
I saw the question in the chat, and it's something that, I make 30, 40 trades, sometimes day trades in a day, and I'm trying to remember the trade. I obviously didn't make a lot on it, or I would have remembered it. I obviously didn't lose a lot on it, or I would have remembered it. So I'm trying to think. What was I saying in the pre-market? I think I was trying to short it because I thought it was up a little bit too high.
Yeah.
I think I probably took a small winner or a small loser on it. I can't really remember what I actually did on it. But like I said, a lot of days I make 30, 40 trades at the open. So I'm going to remember the big winners, the big losers. I don't remember the Ford trade. I think I might have took a small loss because just looking at the chart, it went up to 1143. I think I might have got shaken out. It obviously would have worked out though because it came back in.
Yeah, I was looking at this one. I think you got short like 1127, 1128. So you might have bought it on that opening print of 11 and a quarter. But I was looking. There was a couple highs there was two highs, 1147 and 1157. So I thought 1150 might be a key level. It got to 1144, and then they also had a recall yesterday on your car, right, Spencer? Is your car recalled?
Yeah, I got like a text from my dad at like, I don't know, some ungodly hour, and said I didn't hear about it yesterday, but the exact model, Ford Fusion 2014 to 2018, which is the car that I have. A million cars recalled. The steering column can fall off apparently, which is I've heard.
What kind of car do you have?
Ford Fusion. I've heard that you can't drive without a steering column. I don't know this though, so I have to go get that checked out.
All right, real quick in the chat, Baidu, BIDU, that stock trading up $5.
These Chinese stocks are hot right now.
Yeah, Chinese stocks are hot. I just maybe.
It's funny, 2 days ago, they're going to put tariffs potentially on some Chinese companies. All Chinese stocks are hot all of a sudden. So, kind of opposite of what you'd think. But when Bob is up 3.7%, I almost can guarantee you that Baidu is going to be trading higher because these stocks people do like to pair these things up. I do it too. When I see Baba taking off, I buy Baidu as well because there's usually a sympathy move here. So BIDU, I don't know if there's any company news here, but it's up $4.60. Probably Alibaba helping the cause there.
Yeah, a little bit of a pre-market high, 265. You got a little bit of a seller there, perhaps. But looking on the daily chart, really two levels to keep an eye on. 268 was your 2-day high. All-time closing high, 265.67. If things really get going, all-time high at 270.58. Dennis, quick tax.
Before we leave the Chinese stocks, and then you can come to this question. I just want to say I like the setup here in MOMO as well. Full disclosure, I am long MOMO in my investment portfolio. I like it for a day trade here, though. If this thing can get up above 38, you got 1, 2, 3 highs, kind of just bunching up here. It looks like it's itching to go here again. So keep an eye on Momo. If it can get above 38, it'd be a breakout mode again.
Okay. All right. S&P futures here trading up 3.5 at 57.50. Dennis, you feel like answering a tax question?
That's why I have an accountant. So you can throw it out there. But the one thing, consider I'm Canadian, so my taxes are going to be different if you're asking from the U.S. I don't know anything about how the U.S. taxes work. I have a U.S. tax accountant. Obviously, I pay U.S. taxes because I work for a U.S. or I trade stocks for a U.S. corporation. But the most part, I let my accountant handle all that stuff. I'm not a tax guy.
Okay, so I
never even liked accounting in school. I just never liked it. I like finance. I went through my business degree. I had to take my 3 or 4, accounting courses to get my degree, but really I just struggled through those. It was the finance courses that I liked.
Have you ever heard my accounting class story from Michigan?
No, tell them. This would be a good one. Get a way to finish. So.
Yeah, I took it pass fail because I had to have it, right? And I hated it. And I took it during a spring term, and I was doing okay in it. And like the night before the final, I'm just looking at this stuff, and I'm like, there's no way. I'm toast. I'm not going to be able, I don't know what's going to happen on the final. And someone told me about a party at Michigan State. And so we packed up. We went to the party at Michigan State.
The night before the final?
Yeah, because I knew I was toast. And so I came in, I took the final. I don't know what I think I just guessed at almost every answer. And then the next day it was posted. And I'm like, man, if I took this pass fail and I fail.
What is pass fail? What do you mean you took a pass fail?
You just.
What's that mean? It means you only have two options. You either pass the class or you fail the class.
But is that always the way?
No, but there's no grade.
There's no grade.
There's no grade. It's you pass it or you fail.
Well, you have an option. You can go pass, fail, not get a grade. Is that?
Yeah.
You have that
I took economics too.
Your grade is you pass or your grade is you fail. That's
and
it.
you get credit. You either get credit or no credit.
Really? Is
Yeah.
that normal?
Well,
I've never heard of that before. Obviously, I went to Canadian schools. Is that like normal?
You can
or is
only
that a
do
Michigan?
it like what? You can only do it like a couple classes your whole year. So I did
Really?
it. Yeah.
I never knew that. That's interesting.
So I did it for accounting and I did it for economics. Okay. And so the next day the grades are posted and everything. And I go and I look and I got 19 out of 50 on the final. And you know what? The TA liked me. She passed me. And
So you really failed, but
I got 19 out of 50 at the final. Yep. Her name was Jane Butt was the name of that TA. But anyways, any final comments on the markets here?
Just looking, we're obviously just kind of hanging out here. So S&Ps are just doing absolutely nothing. I do like those Chinese stocks today. So again, if I'm looking at, those are ones I'm trying to buy potentially at the open just for day trades, the Baidus, the Momos, the JDs, because Alibaba is off to the races. Always AABA is one to think about too, but that's obviously trades already up in sympathy there because that's just Alibaba tracking stock basically now. Square buy and balance continues to grow. I've talked about it multiple times. I said I liked it in the lower 55s. I don't know if I'm going to get a shot down there. Really, the other imbalances are very mixed. I do like the banks here this morning. I am long some of the banks. But, keep an eye because some of that might all be priced in on that Dodd-Frank stuff.
iBoss 416 looking for low float runners. Just keep your eye on your Benzinga Pro. They are all over those low float stocks. And I guess RDKA, we'll just check that one real quick. That was the hot one from yesterday. I get the symbol wrong every time, too.
There's some news just breaking here, just to come out here in tobacco. Just breaking here now. The FDA is looking to explore lowering nicotine standards in cigarettes. And if you look, MO getting hit right now on this headline here. We know this stuff got hit before. Just keep an eye here because, I don't see Philip Morris slightly trading lower here in the pre-market, but just breaking here just now.
62.10, 62.11. That's a double bottom. That's another 70 cents away. And Dennis at RKDA just hit yesterday's high. So if you didn't get out yesterday at that level, it just popped. Now 55, 75. This thing is all over the place. All right, Spencer, 3 minutes over. We don't want to pay you overtime, so you want to wrap things.
I'm going to wrap up. That's funny for you, Dennis. No, real quick, I want to mention if you use Benzinga Pro and you would like to be featured on Benzinga.com in an article, talk to me and talk about your trading and kind of how you trade, feel free to email me, spencerisrael@benzinga.com, SPENCERISRAEL @benzinga.com. And we're looking to highlight some people who use Benzinga Pro and kind of how you use the platform and just really how you trade. So that's an option. You can also check out Benzinga Pro at pro.benzinga.com if you haven't already and get a free 2-week trial. But that's our show today. You can catch the podcast as usual on iTunes, SoundCloud, and Stitcher, or just go to youtube.com/BenzingaTV. Thanks to our guest, Marc Chaikin. On tomorrow's show, Tim Melvin, author of Banking on Profit. He is maybe the best small bank analyst that we have or that we know. So that'll be on Friday's show. But hope you all have a good rest of your day. Hope you all do well in your bracket starting today.
Go Blue.
We'll be watching in the office. And have a good day.
I might not be on tomorrow. 9:50 tip-off for the Michigan game. So I'm going to have to stay up way past my bedtime.
All right. We'll see. Have a good one, folks. We'll see you tomorrow.